Most Americans think the tax system is rigged against them, but what if I told you the biggest advantage isn't reserved for billionaires or corporations, it's quietly being used by the middle class right now, and almost nobody is talking about it. Every year, millions of people overpay the IRS simply because they don't understand how the rules actually work. The truth is, the US tax code isn't just a system to collect money, it's a system designed to reward certain behaviors. And in 2026, a growing number of financially smart Americans are learning how to legally play that game. Here's the shift that's happening. Instead of focusing only on how much they earn, people are now focusing on how much they keep. That mindset alone is creating thousands of dollars in extra savings every year. One of the most powerful but underrated strategies revolves around tax-advantaged accounts. Most people know about a 401k, but they treat it like a retirement checkbox instead of a tax strategy. When you contribute pre-tax income into a 401k, you're not just saving for the future, you're actively lowering your taxable income today. That means if you're earning, say, $70,000 and you contribute $10,000, you're only taxed as if you made $60,000. That difference alone can push you into a lower tax bracket and reduce what you owe significantly. But the real loophole mindset comes into play with something even more flexible, the HSA, or Health Savings Account. This is where things get interesting. An HSA is often called the triple tax advantage account because your contributions are tax deductible, your investments grow tax-free, and withdrawals for medical expenses are also tax-free. In 2026, smart middle-class earners are treating their HSA like a stealth retirement account. Instead of spending it every year, they invest the funds, let them grow, and pay for current medical costs out of pocket. Decades later, that account can turn into a massive, tax-free asset. Another strategy that's gaining serious traction is depreciation through real estate, even for people who aren't full-time investors. Thanks to short-term rental platforms and house hacking, more Americans are buying small properties or even renting out portions of their homes. What most people don't realize is that the IRS allows you to depreciate the value of that property over time, even if it's actually increasing in market value. That depreciation becomes a paper loss, and that loss can offset real income. So you could be earning rental cash flow and still report little to no taxable income from it. It sounds counterintuitive, but it's completely legal and widely used. Then there's the rise of side hustles and small online businesses, which have exploded in recent years. What used to be extra income is now a strategic tax advantage. When you operate as a sole proprietor or LLC, you unlock a whole new category of deductions. Expenses like your home office, internet, software subscriptions, even part of your phone bill can potentially reduce your taxable income. The key here isn't abusing the system, it's understanding that the IRS actually encourages entrepreneurship by offering these deductions. In 2026, more middle-class Americans are intentionally creating small businesses not just for income, but for tax efficiency. And let's talk about timing, because this is where people miss out the most. The difference between paying taxes this year versus deferring them can completely change your financial trajectory. Strategies like Roth conversions, tax loss harvesting in brokerage accounts, and even choosing when to sell assets are all about controlling when and how you pay taxes. Wealthy individuals have done this for decades, but now these strategies are becoming more mainstream thanks to financial education spreading online. What ties all of this together is a simple realization: the IRS tax code isn't a secret, but it is complex enough that most people never take the time to learn it. And that gap in knowledge is exactly where money is lost or saved. The middle class isn't cheating the system, they're finally starting to understand it. They're using retirement accounts strategically, turning healthcare into a tax shelter, leveraging real estate rules, and treating side income like a business advantage instead of just extra cash. At the end of the day, the biggest loophole isn't a hidden clause buried deep in the law, it's awareness. Once you understand how money flows through the system, you stop playing defense and start playing offense. And in a world where inflation is rising and income alone isn't enough, knowing how to legally reduce your tax burden might be one of the most powerful financial moves you can make.